The NASDAQ 100 closing lower by just over 2% today, ahead of Nvidia earnings next week. Joining us with his view on the tech sector is Eric Sheridan, managing director at Goldman Sachs, who does not cover Nvidia. So I'm not asking you specifically about Nvidia. Eric, welcome. But I can't help but notice today, after this rough day, Amazon's down 1% for the year, Apple's down 2%, Microsoft's down 3%, Google, Alphabet down about 5% year to date. Is this an opportunity or a warning?
Well, I think it depends on the name, John, and thanks for having me on. I think there is a clear shift going on in the AI trade away from purely investing in the infrastructure layer to also looking at the application layer. So if you were to look at Meta year to date, that's a very different dynamic than maybe you've seen in some of the infrastructure stocks that benefited dramatically from the build out of AI if you look backwards over the last 6 to 12 months. So I think there's a key shift, started with DeepSeek and what came out of China a couple of weeks ago, as people started to focus on maybe moving from training to inference and infrastructure to application. And I think those themes are broadly working their way through the market over the last couple of weeks.
So should we expect to see the AI names traded, the AI application names, I should say, particularly in enterprise software, trading differently going forward than Nvidia and the infrastructure names like even a Dell, Supermicro, et cetera?
Well, I think you are going to start to see some diffusion. You know, there typically are these market themes. Magnificent Seven has been a dominant theme in the market for most of the last year plus. But if you look at the year-to-date performance of some of those stocks, there have been some breakdowns. So within our sector, we would say having exposure to the digital consumer, we still like that exposure, even with some of the debate around consumer spending over the last couple of days. So Amazon and Uber obviously not in that definition of the Magnificent Seven. Meta, as a play more on playing offense than defense and a little bit more of the application layer than the infrastructure layer within digital advertising and the AI theme. I would look somewheres in terms of some of names like that as opposed to just painting all these names with a broader brush.
DeepSeek said that it's going to make 5 of its code repositories public next week as it continues with a commitment to open source its technology. We saw Chinese tech names really led by Alibaba in particular the last couple of sessions, powering broader markets in that part of the world as well. Should we start thinking about this from a Chinese versus U.S. AI tech trade from this point on?
No, I wouldn't look at it just as specifically as that. I think the broader theme, if you zoomed out, would be less about geographies and a little bit more about that we're moving from training to inference. So, you know, we've built these huge foundational models. They will continue to get better. But when I've been on before, what we've talked about, Morgan, is the idea that the incremental improvements in these foundational models are starting to slow down. So like most computing shifts, what typically has to happen is what gets built on top of the infrastructure layer. You know, when we went through the mobile computing shift, it wasn't spectrum and network as to where all the value was derived. It was building businesses like Uber, Airbnb, and DoorDash on top of the mobile computing cycle as to where there was a lot of return on capital that was generated. So in the consumer side, which is where my focus is, what is the adoption rate that we're looking at over the next couple of years of things like ChatGPT, Google Gemini, Perplexity, Meta AI? That's where the proof points are going to be on the potential visibility into return on AI. If they come through, the CapEx will continue to come through and the return profile will continue to become more clear. If they don't, then we'll have a debate as we get deeper into the year as to the sustainability of some of the CapEx trend.
Goldman Sachs dropped a bombshell today as they revealed that they are buying a huge amount of Nvidia stock right now. Despite the market's volatility and how it has affected Nvidia, Goldman Sachs is seeing something that we are not. What could it be? Welcome back, everyone, to Investocracy.
Has the market gotten ahead of itself? Let's ask Fast Money friend Gene Munster. Gene, what do you think?
Melissa, if you're an investor in the AI trade and present company included, I would be concerned about a recession. I would not be worried about Joe's bubble comments. That word obviously strikes people's attention, but I wouldn't be worried for a couple reasons. First is that what they said, as you mentioned, that was back on February 20th about that build out being 3 times what they've had over the past or the next 3 years. Equivalent to what they've done over the past 10. So consider that a month ago, they had some pretty bullish comments about the AI hardware infrastructure. And of course, what we heard from the hyperscalers at the end of January was that they accelerated from a 20% expectation growth to just above 40. Now, in the world of AI, a month is a lifetime. And so you can build the case that despite what Alibaba said a month ago, maybe things have changed. And so what do we know? Micron's the only company that's reported, despite their stock being down on margin guidance, they raised guidance by just under 4% for the calendar year here. And so that's kind of the fundamental piece. But I actually think there's a bigger force in play here that gives me confidence about where the AI trade is. And this is not a race about the hardware build out. It's not about building an AI hardware infrastructure to power today's chatbots and tomorrow's agentic bots. This is a race, and this is what the hyperscalers are thinking. This is a race to get to artificial general intelligence. And we're probably 3 years away from that. That's the game that they're playing. They don't care about what the demand is for these applications 1-2 years down the road. They want to get to general intelligence, because at that point, you have exponential value that gets unlocked. And there is winner take most as they race towards that goal. And so as long as that target is on the horizon, I think you're going to see some magnificent spending from the Mag 7 on the AI hardware piece.
In the fast-paced stock market world, there's no time for dull moments. The technology sector has been a beacon of hope and uncertainty in recent times. The rise and fall of tech stocks have kept investors on the edge of their seats. But fear not, for even giants stumble from time to time. And Goldman Sachs probably agrees with that sentiment since they stay bullish on Nvidia stock. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
You know, Gene, when you talk about 3 years to AGI, I mean, it seems like an eternity again in this kind of generative AI trade. And I just wonder between now and then, and I'm probably one of these people, even though I'm the silver lining guy on the desk, I'd probably take the over in 3 years to AGI. So I guess my question to you is like these, what?
AGI. Can we explain that?
It's basically general intelligence. It could be smarter than Guy Adami in 3 years.
I thought tonight was the show.
We should. But Gene, help us think about like what might happen on that way to AGI if we do have a recession, if we don't find the use cases anytime soon. I mean, these companies have to be somewhat responsive to shareholder demands. And at some point, and we learned this from their earnings just a few weeks ago, when you saw revenue deceleration and you saw these companies stick to those, CapEx numbers, shareholders didn't like it, and they all went down 20% in a straight line.
So I think there's going to be a difference between what happens to the AI stocks in that scenario if we get a recession versus what happens with the fundamentals in the hardware trade. So on the stocks, they'll go lower on a recession. Historically, that has been the catalyst that started the bursting of bubbles. If we even go back to the Tronics bubble in the 60s and 70s, that was the catalyst to that. And so, but your question is about what happens with the hardware piece, and will the hyperscalers basically pull back as they start to see, let's say we do go into a recession. And I think that it's reasonable to think there'll be some cuts to that, but I think that's probably some of the last places to get cut. I do believe what we've seen over the spending from the hyperscalers over the last couple of years is a sign that they believe if they don't make these investments, they could be irrelevant in the future. And so I think that intensity isn't going to change. I think, again, if there's a big pullback, they'll make some adjustments. But I think that the CapEx spending on the AI hardware piece is going to be relatively protected because of that big existential risk that they're facing.
But I mean, I understand that a recession you think won't impact them, but why aren't DeepSeek moments, and I use plural, why don't they cause you to rethink how much the hyperscalers might spend or how much companies in general might spend? And not only do we have DeepSeek, but we also had Ant Financial saying that it used chips from Baba as well as Huawei to train an AI model that had comparable results to using an Nvidia chip for 20% less.
Part of the reason is that when DeepSeek came out at the end of January, is that was known for the public at that point. But the hyperscalers knew about DeepSeek before that came out, probably knew about it for 6 months. And they were still through that period. There was a couple earnings revisions where they continued to ramp that up. And so essentially the substance of this is that if you believe that the hyperscalers are competent, if they're strategic, if they understand how this tech works, they're basically saying what they've said over the last 9 months is that they don't believe that, or they believe that the scaling laws will hold together, that to continue to move towards general intelligence, that what we saw with DeepSeek was more of a head fake than it was relative to the substance of getting there. And so all these are use cases, these are powerful use cases for some what I would consider tier 2 AI use cases, like with DeepSeek. But to be at that front edge, again, that's where the spending is cutting that front edge. I think it's still going to be robust for the next couple of years.
Despite the setbacks, the future of technology stocks remains promising. Deloitte's 2025 Technology Industry Outlook paints a rosy picture with a projected increase in global IT spending. AI, the driving force behind tech advancements, is set to witness exponential growth, with investments pouring into software and semiconductor sectors like never before. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Because only Nvidia's chips are strong enough, smart enough, and fast enough to develop things that we haven't thought of yet, or things that sound like total science fiction. Nvidia chips will be vital to make these designs come to life. And we don't even know what those designs are yet. I want you to listen to this. It'll tell you what I mean. You were talking about we need an amount of computation that is easily 100 times more than we thought. So far, so good.
Yes.
Last year. Were we that off last year?
Yeah, we're way off, yeah.
We were. We didn't see it.
Yeah.
We just didn't know how important it is.
Well, we realized that reasoning is very important to intelligence. And we realized that one-shot AI that we were using wasn't representative of intelligence and that we were going to make incredible progress. And last year, with reasoning models coming out, ChatGPT's reasoning model and others, and it just took off.
Intelligent factories took off. We didn't even know you could have them. And now they're huge. Do you think that the companies buying these chips don't know what they're doing? It's the opposite. They're trying to play a part in the next industrial revolution. There may be money you make for everyone, maybe beyond even anything that Joe Tsai could imagine. These data centers can become the brains of autonomous vehicles. They can be used to run chatbots at a speed that you can't even see. They can run robots that can do anything that we can do, but better. It's just too early to find out the winners because everything's so new and we don't know what these companies are really working on. When I was at GCC, the Woodstock of AI, I saw things I didn't even think were possible. More important, I saw things I'd never imagined. And that's why I don't think it's a bubble. The use cases are just too great.
Nvidia holds immense potential for growth and prosperity. And if you won't take our word for it, then maybe think again with Goldman Sachs backing this sentiment up. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.